Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IP Go, the show where we take a look at the IPO world, past, present, and future. We're now halfway through 2021, and although it's hard to imagine where all that time has gone, it's the perfect opportunity for us to look back and take stock of how the new issues markets have fared throughout 2021 to date. Up to June 23rd, there have been 541 IPOs in the U.S. this year. That figure is an astounding 541% higher than that seen in the first 6 months of 2020, when both the stock market and the underlying economy were still reeling from the effects of the pandemic. Though the IPO market made up for lost time in the second half of 2020 and finished the year with 480 deals under its belt, by contrast in 2019 there were only 232 IPOs in the U.S. across the whole year. 2021 is on course to be a bumper year for IPOs in terms of the volume of deals concluded. And once again, we will eclipse the number of deals done at the height of the dot-com boom back in the year 2000. March was the busiest month for deals, with 151 listings, the equivalent to over 7 deals per trading day. And both January and February also saw triple-digit listings, with 118 and 132 deals respectively. The pace of deals has slowed significantly since then, with only 49 deals in April, for example. We can put the decline in the monthly number of IPOs down to the fall in the number of SPACs, or special purpose acquisition vehicles, coming to the market. Launching a SPAC may have seemed easy at one stage. However, getting access to funding became far tougher in the first quarter of this year, and the list of viable takeover targets also grew shorter as more reverse takeovers were consummated. That said, we've tracked the launch of 231 SPACs in 2021 to date. However, only 27 of these are currently trading above their issue price, with many more trading flat or at discounts that are as large as 3.7%. If we look at the performance of all the IPOs in the first half of 2021, the average return on a deal or average premium to the IPO price is 4.44%. However, the median or midpoint return for those deals was actually negative at 2.1%. The best performing IPOs so far this year are ALFI and UTime, which have returned 292.5% and 256.25% respectively since listing, while Lucira Health and Verpax Pharmaceuticals have been the most disappointing and are down by 70.47% and 61.6% each. 147 of this year's IPOs are currently trading above their issue price, while 380 deals are trading below theirs. That suggests that listing companies and their advisors have been too aggressive in their pricing or too optimistic about the prospects for these businesses. And although each deal needs to be judged on its own merits, it also tells us that you didn't need to chase the vast majority of new listings this year. The takeaway for investors here is to do your homework and research on a prospective IPO before jumping. Look through the promotional hype and ask yourself questions such as these. What's unique about this business? How will it be valued relative to any quoted competitors at the bottom, top, or even above the indicative IPO range? And what are the prospects for growth in the sector or industry within which the business operates? If you're not happy with the answers you get back, should you be investing in that stock? That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions.